Okay, so hopefully you guys can all see my screen and you can also hear me clearly. Do let me know if there are any issues with the sound or if there's any issues with the screen that you're seeing at the moment. So let's get right into it. So the ECB. So what is the deposit rate? That's the main rate that's being talked about at the moment. So it's the first it's the interest rates paid by the ECB to banks having a deposit. So for the moment, the rate is for the moment it is the opposite because the rate is negative. So again, just to clarify, it's the amount that is paid by the ECB to commercial banks, putting their money in to the ECB's bank. So that's the deposit rate, and then so what it does, it provides banks where they can place their excess reserves and earn an interest rate that's usually 100 basis points or percent below the main refinancing rate. So what it does is it establishes a floor on the interest rate, since no bank will lend money out at less than what it can earn at the deposit facility. So also this similarly to the Bank of England too, where Bank of England will pay banks for depositing money at the central bank as well. But that's what you've got to understand is what the deposit rate is. Then, so you have PEPP versus APP, or the Pandemic Emergency Purchase Program versus the Asset Purchase Program. So APP QE is basically what it is. It's buying longer term debt or government securities, or you can think of as treasuries. And PEPP, which isn't restricted to certain securities, it can be used anywhere with any amount for commercial banks to withdraw some liquidity from the central bank. Okay, so where is the economy at the moment? So we've inflation at a record high again at 8.1% versus 7.4%. The S&P manufacturing PMI latest data showed it was slightly lower than the previous reading at 54.6 versus 55.4. And then we have the composite PMI flash, which measures which puts together the services data and the manufacturing data together to get an overall reading. It was also lower as well at 54.8 versus 55.9. The consumer confidence also was slightly higher compared to the prior at minus 21.1 versus minus 22. And economic sentiment was unchanged at 105. So the previous ECB meeting comments then, so you had the Governing Council that declined to advocate for a faster path to interest rate hikes, although the door remains open for the first hike as early as September. That was what was said on the day of the last rate decision that we had. And they said in the statement that the recent economic data made it more probable that the bank will cease its net bond purchases in the third quarter, contrary to some experts' estimates that the central bank would be obliged to actually push the date forward to the summer to prepare for interest rate hikes. However, in the press conference that we had with Lagarde, she stated that an interest rate hike might occur as soon as a week after the end of asset purchases, leaving a September hike on the table. So, of course, she didn't say that the hike could happen in September, but she's kind of just left that door open to traders through her comments that she had made in that press conference. So the key thing is to highlight that, of course, now that sentiment has changed with traders expecting a rate hike in July, and some traders and money market participants expecting a 50 base point hike in July as well. So, of course, APP ends this month by the end of June. So they did say that by the end of QE, when they do end QE and they end the APP, when they do end APP, then they will start to think about considering raising interest rates. So also because of the less hawkish comments that had come through from the meeting minutes and also Lagarde, the way that the market reacted is we actually had seen the euro plummet to below 1.08 against the dollar, and it reached a 23-month low. So as I said, because the ECB was less hawkish in the expectation of talking about when an interest rate hike could occur, and when APP will, and how soon will it take for that to happen after APP ends. Though those expectations weren't really met from the ECB, and hence we'd seen the reaction in the market on that day. And we'll look through the deviations too, or more so the reaction from the individual currency pairs as well later on. So then the bets and expectations. So this is always a fun thing. Or when I say fun, I mean that it constantly changes and views change all the time from the markets. But this time round, the market expectations actually weren't that mixed. There was more of an expectation that rates will be raised sooner rather than later. So if we're going from May the 10th, okay, and then we'll go all the way up to today. So you had Citibank on May the 10th expecting the ECB to raise interest rates by 25 basis points in July, and then another 25 basis points in September. And then also on that day too, you had money markets that scaled back their expectation for ECB rate hikes to 86 basis points by in total by the year end, from around 95 basis points on Monday. And then May 17th, you had traders betting on a 1 percentage point of ECB rate hikes by the end of the year, 2022. May 18th, money markets increased their ECB rate hike bets, and they expected 110 basis points by the end of 22 versus 105 basis points on Tuesday. And on May 30th, money markets wagered 113 basis points of rate increases by the year end. And on top of that, you had seen that German bonds held their declines, i.e. the price of the bond. The benchmark 10-year yields were up 8 basis points at 1.05%. So as I kind of go through these other expectations, then what you see is that there is a gradual increase in how much the ECB will increase their rates by. The euro, what it has been doing is it's been pricing those in already. So we had seen an appreciation in the euro ever since those money market bets had come through after the rate decision. But one other key point to mention as well from Barclays. So on June 6th, they expect a 25 basis point increments at each meeting from July till the end of the year, and then once more in the first quarter of 2023. I think the key thing is why we've seen a big appreciation in the euro is because of some of the comments that have been made by some of the ECB members of talking about potential 50 basis point hike. Now, recently, yesterday, we had ING with their rate expectations saying that anything less than an openness to 50 basis point hike for July wouldn't be good for the euro, even though, and already 25 basis points hike is already priced in for July. So what they're saying, what ING is saying is that from the meeting minutes, okay, or the statement, should I say, from the ECB, is that if there's any indication for an openness that the ECB would look to raise rates by 50 basis points in July, when the markets are already pricing in 25 basis points, right? Then that would in fact be that would be very positive for the euro. Instead, more of a confirmation that the ECB, well, they're going to end their APP and their QE, and they're going to take strong action, similarly to other central banks such as the Federal Reserve, the Bank of England, and the RBNZ, the RBA, when they had their surprise 50 basis point rate hike this week. Then that would be a very positive sentiment for the euro, according to what ING expects. But anything less than an openness, or anything less than an openness to a 50 basis point hike, or just kind of repeating that a 25 basis point hike would be done in July, could cause some potential downside movement in their eyes as to what they see. So key comments then and key things to be aware of. So ING, they didn't actually put out a crib sheet this week, but what they did say is that they put out some key bullet points of what to look out for, what to focus on when we do get the ECB meeting, when we do get the ECB statement on the rate. So the key thing for them is to look out for the staff projections, especially the 2024 inflation figures. Of course, inflation being at a record high, more or less being out of control when the ECB is looking at their ECB is keeping their inflation expectation of where they would want it to be at 2%. That is something to be aware of as to whether or not that if inflation does continue to persist above the 2% level, or if compared to the previous meeting, compared to the previous statement, whether or not that would be less than the 2% target. But again, the 2024 inflation figures is going to be quite key to keep an eye on, or future inflation figures. And then any hints that the ECB may hike more than 25 basis points in July and September, signaled by Lagarde and Lane. And then finally, whether or not the Lagarde will address the sequencing topic and how she'll answer questions about delaying tightening until July. So again, the key thing is how quickly will the ECB hike rates after the end of APP, or as a surprise, will they continue APP, the asset purchase program, and then kind of delay the first rate hike? So again, you're looking out for, what you're trying to keep an eye out for is the timeline then of how quickly or how slowly the central bank would tighten monetary policy. Okay, so this is also quite a nice image from ING as well. And what it's showing here is the expectations then for how much the ECB will raise their rates by. So if we're going back here in March on the 10th, and then we'll see that there's the timeline to show the amount of rate hikes, or the amount that the rate is raised by, is much smaller compared to recent to the recent timeline of where in May, or 18th of May, as being showing that we could reach with the interest rates, or there could be a total of around 130 basis points of hikes from the ECB, compared to around, or less so, or less than, or around 50 or 60 basis points of rate increases, of rate hikes from the ECB in total. So just to clarify why I'm showing this is that with traders, if they're expecting the ECB to raise rates by a bigger amount, and that has been shown by the euro seeing that appreciation, or more so of an appreciation compared to what we had seen in March after the other rate decisions that we had. Active Himelda says, most useful YouTube channel. Thanks for this kind of information. Good. I hope you do find it useful, and I hope it does help you with your trade today as well, if you are going to trade the ECB rate decision. Just on that point then, with these big releases like interest rate decisions, or let's say non-farm payroll figures, or job figures, that it will create a lot of volatility because they're so important to the economy, and that is taken into account. So there's an increase in amount of volatility. So hopefully I can try and help you with that as best as I can, of what to kind of expect from the ECB and what it could do to the markets. But again, as said, that's a nice little image there from ING, showing you that expectations for stronger tightening from the ECB is expected, compared to a month after the rate decision that we had seen from March there. Okay, so the views then. So this is also quite key too. So Bank of America, so now they see a half point hike in both July and September, followed by 2 quarter point hikes in October and December. So they see a total of 150 basis point hikes by the year end. And also economists, of course, not only with the ECB, but they're also keeping an eye out on inflation expectations, which should back up the potential comments for optionality and graduality. So what does that mean then? Again, is the same thing, sequencing. How quickly or how slowly will the central bank or the ECB be when tightening monetary policy? And what are the other factors that will play into the hand of that? Of course, the ECB, their main role is to keep an eye on inflation expectations and try and anchor it to their 2% target. Whereas in the Federal Reserve, although normally they have jobs and a maximum employment as one of their mandates and keeping inflation to the 2% target, of course, all the central banks have more or less been focused on inflationary pressures within those different economies. So again, how will the inflation expectations have an impact on the ECB, and what kind of actions will they take to try and rein in record inflation in the Eurozone? So ECB member views. So this is why we've seen an appreciation in the euro when we've seen these comments come out, and why it's important to understand and know that these comments have come out. So you had on April 21st, De Guindos, who said that an ECB rate hike is possible in July, but that will depend on data. We had seen that the euro had strengthened off the back of that comment. And Nagel, of the central bank in Germany, had said that the ECB could raise rates as early as July. So the key thing to bear in mind is at the beginning or just after the rate decision was made, or the rate statement, the rate had come out in April, that these ECB members are now talking about having a possible rate hike in as early as July. Remember, QE ends in June, and they did say that they would look to raise rates after that, or look to consider raising rates after that. But now you're getting more confirmation from these ECB members, particularly the key members. Of course, Nagel doesn't have any voting rights for today's for the rate decision for today that we're going to get, but it's still quite key sentiment-wise. And Germany being the biggest or the strongest economy within the Eurozone, a comment like that coming from their central bank or their central bank governor is quite key to know where the rate path could be and how soon we could start raising rates. But as we kind of go on, then we get ECB's Not, who says on May 17th that a 25 base point rate hike in July is realistic. And then De Cost says that the first rate increase could occur in July. And then June 1st, we had ECB's Holzmann saying new inflation record backs the need for a 50 base point hike. So Not was the first member to say, okay, first we need a hike in July, or first the hike in July is possible, but a 25 base point hike is also realistic too. So he actually gave a number to how much the ECB could tighten monetary policy by or raise the rate by, compared to the other members who hadn't and had just said by July. So if we look at the bond spreads too, so the bond spreads is quite key, right? So the German and Italian bond spread widened by 200 basis points versus 140 basis points at the start of the year. So what it means is that when the bond yields start rising, excuse me, when the bond yields start rising, that's traders expecting an interest rate a bigger amount of interest rates to come in to the economy. And of course, when rates are raised, the short-term rates, right, the longer-term rates start to rise as well. Okay? That's how the markets react within the bond market. So the yields start to rise further as traders price in further rate hikes or stronger rate hikes later down the line, and the bond prices will see a move towards the downside. So, of course, Germany being the key economy within the Eurozone is used as like a benchmark then for where their bond yields are compared to other nations within the Eurozone. So you can see that the difference between the German and the Italian bond spread being around 200 basis points is quite a big difference, or a big gap between those. So if the German economy is starting to pick up and starting to do well, and the ECB is recognizing that, then of course, with the rate hike expectations that are also going to be stronger too. So you're going to get a bigger difference between the German bonds and also the other bonds compared to the German bond spread. So I think that's also, again, as I said, markets pricing in the end of QE and a potential rate hike in July. So that's just something to be aware of how bonds are reacting. So the first comment that one of the comments that we had, that a possible rate hike could happen in July. So this was the market reaction that we had. So ECB's Kazakhs said a rate increase is possible as soon as July, on April 20th. Again, he didn't give a figure like ECB's not, but he did say that could be possible in July. So this is how the markets reacted. So we had seen the euro dollar see that movement towards the upside off the back of those comments there. So that's one example of stronger with an expectation for an earlier rate hike, as to show that with an earlier potential for an earlier rate hike, that the euro had seen an appreciation. De Guindos said an ECB rate hike is possible in July, but will depend on data. Again, the euro had seen that appreciation there. And if we're looking here too, so one thing that I made as like a little infographic for you guys, and I put it on Twitter and also on the Financial News website, is the change in sentiment from the ECB members as well, and whether or not where they fall on the dovish and hawkish scale, which is quite important to note. So the grayed out area represents the expectations from the previous meeting. So you'd seen that Panetta, Dacos, Storneras, and Herodotu were on the very end, or on the very end of the dovish side. But with the June meeting and the data and the rate that we're expecting to see today, now that there's a shift in sentiment, okay, going from a more dovish stance towards a more neutral stance for the members that are more dovish, okay. And then as we kind of go on, we can see that such a member such as ECB's Ren taking a big, more of a big gap of a jump between being a bit dovish to going to neutral. ECB's Casimir flipping from that neutral standpoint to being a bit more hawkish. And then you see that you can see even with the hawkish members of the ECB, they've become even more hawkish, or slightly more hawkish. So you had Nagel, as I said, he doesn't have the voting, he didn't have voting rights for this meeting, but was becoming more hawkish. Not as well, and Holtzman more or less the same where he is, but still remaining as the most hawkish member of the ECB. Then the key thing when you're looking at this little infographic is, where's Lagarde? Where does she fall on this? Dovish and hawkish line? So originally, of course, or beforehand, she was on the neutral position or neutral point. But then with some traders and economists saying that she was hinting at a potential hike in July, she's also been nudged more towards the hawkish side. So again, of course, Lagarde is the person, of course, the central bank governor, and her opinions will always have some sort of an effect on the euro, depending on how she says things and what she says. That's looking at her and where she falls on the spectrum. Then is very key to understanding the rate expectations that we've seen coming through from the markets, and how the euro has seen that appreciation when we do get comments of a potential hike by 50 basis points, or potential hike in July. And of course, you've got De Guindos and Schnabel there as well to keep an eye on too. They've basically, although Schnabel being quite falling into the hawkish spectrum, remaining unchanged. Okay, so hopefully that kind of gives you a clear depiction as then that the ECB is becoming more hawkish in their sentiment and in their views of where the economy is. Okay, Peter Guthman says, great presentation. Good. Glad you're enjoying it. Okay, so Lagarde then. So in the last meeting, so this was quite difficult, I think, for Lagarde. Okay, so she had to, she's got to satisfy, she's got to try and satisfy both parties at the ECB, those on the dovish side and those on the hawkish side. What I mean is that the comments that she makes about potential rate hikes or the end of QE, that's something that more or less, as said, whatever she says kind of goes. You know, it will more or less happen when she says, you know, that if she does say that hike could happen in July, or if there could be a possibility of a 50 basis point hike. So in the last meeting, in the meetings that we had in February and March, she was quite hawkish with saying that there will be an end to QE in June, whereas beforehand there was looking to have the APP at about 10 billion euros in October. So there was a movement forward in the timeline of the expected end of QE and an expected rate hike. So in February, March, that was great for the euro. But in April, she played it quite safe. So one of the comments that was picked up is that rates will be raised sometime after the conclusion of APP. And there wasn't any clear indication as to which month the rates would be raised. So this slight uncertainty, or not enough clarity, or being very specificness from Lagarde, and also the ECB statement, had caused the euro, as I had shown you earlier, to plummet to a 23-month low, to about 1.08. So there was a lot of selling that had happened because of because there was no specific detail of when a rate hike could occur, and how much that could and the rate could be raised by. So compared to the February-March data that we had in the comments, April was more of a mixed reaction from the markets. When Lagarde was speaking about what the ECB rate statement was about and where she sees the economy. So again, so May 21st, something that I did say before is that markets were seeing that Lagarde signaled that July is the likely lift-off date for ECB rates. Okay, so ever since then, as said, markets been pricing that in. Key thing to be aware of today then is whether or not, first of all, she confirms July is when the first rate decision will happen, and whether or not she'll kind of go with what other ECB members are saying, whether or not there could be a 50 basis point hike in July. Or, as said, a 25 basis point hike for July is already priced in from the markets. So anything less than a potential 50 basis point hike, or less of an openness to a 50 basis point hike, as ING has said, then it could cause some potential movement towards the downside for the euro. Okay, remember, there's the expectations that markets have, and when the expectation isn't met, okay, and we fall short of that, then there'll be an increased amount of volatility, and we could see some more of a negative reaction from the markets. Just like with the interest rate decisions, when the central bank is expected to hike rates by, let's say, 50 basis points, but they keep the rate unchanged, that is the expectation not being met at all. So in actuality, you'd see a negative reaction from the markets. Whereas if things kind of fall in line with expectations of a 50 basis point hike, yeah, you might see a bit of appreciation from the currency, but it won't be you won't see such a big move as we'd seen with the Federal Reserve, as we'd also seen with the Bank of England with the expected rate hikes. But anything above the expectation, or even better, would put some upward pressure onto that currency. All right, so this is the we've got about 14 minutes before the rate decision, but what I want to show you is then the previous market reaction that we had seen from the ECB rate decision. So if I play that for you here, so on April 14th, let me just make it a big screen. Okay, so video quality isn't that great, but well, but now the videos that I have recently are much better than that. Let me see. I think I've put it to about a minute beforehand. Let me see. It's about 22 seconds. Okay, it's on the dot then. So we're expecting the rate decision to come out. So as expected. Then one thing to kind of consider is the comments that had come through, or the lack of comments that didn't come through to the markets. And we'd seen, again, very, very choppy here. So the euro has started to see that weakening there off of the back of traders reading through the comments, remember, and taking it in what was being said by the ECB. And then, of course, the lack of the comment of when a rate hike could occur, or a specific month, and how much the rate hike could be, had caused this movement towards the downside, or depreciation in the euro in the markets. If we kind of go forward a little bit more. So again, see, so that point there, whoops, if I get rid of that. So that point there, that headline there, that had come through, saying that the expectation, also at today's meeting, the ECB judged that the incoming data since its last meeting reinforced its expectation that net asset purchases under APP should be concluded in the third quarter. Okay, not being very, more or less repeating sentiment, repeating comments what has been said in the past two meetings, and not giving a more of a hawkish comment or statement of when a rate hike could occur, saying whether it could be July or September or October. Again, that was one of the key comments to be aware of as to why the euro had seen that depreciation last time. So just to make it clear of what we're expecting today from the ECB, if for some reason that we get from the statement that they repeat the same headline, that the rates could be raised, after the in the third quarter, or something similar to that effect, I don't see that there is the potential for the euro to have a similar reaction when traders are expecting the ECB to be more hawkish in their statement and actually say when the first rate decision is going to be and how much that rate is going to be raised by. And if it is, and so traders are expecting July, as said, and they're looking for a 50 basis point hike in July. So if we don't get those sort of comments coming through, or an openness to that, then again, we could expect some movement towards the downside on the euro instead. So kind of keep playing it a bit more. See where are we? Okay, so they had it. So I know you can't see that clearly, but the headline of what traders were expecting. So they priced in 64 basis point hikes, 64 basis points of ECB hikes by the year end versus 68, which is what they were expecting the day before. So there was less so of an expectation of rates being hiked by less amount of rate hikes, or less. Excuse me. What I'm trying to say is they're expecting less. They're expecting a less stronger rate hike from the ECB than they were beforehand. I don't know, that's quite difficult to say. But rate expectations are always fun. But yes, so that's what had happened post the ECB rate decision that we had. Okay, if I kind of go forward, and one thing I want to look through then is through the deviations. Okay, let me just get out of that there. Let's bring up the deviations here. Okay, so this was how the markets had reacted. So on the Stocks 50, we'd seen about 11 ticks towards the upside. And then after about 10 minutes of trading, that's what the bracket represents. We'd seen about 3 ticks down. So it was positive for the stock market. The euro dollar, as we'd seen here, we'd seen about a 28 pip move towards the downside on the first candle to the bottom of the wick. That's what I usually do for the first candle. It's go from the start of the candle to the wick. And then after about 10 minutes, the euro dollar was down by about 42.5 pips. Euro GBP, we'd seen 11 pips down, and after about 10 minutes, we're about 14 pips down. Euro JPY, 29 pips down there, so similar, a slightly stronger reaction to the euro dollar on the first candle, but after about 10 minutes, more or less the same. It was down about 42.5 pips. Euro Swiss franc, not as strong as a reaction compared to the euro dollar or euro JPY. We've seen about 13 pips towards the downside, and then after about 10 minutes, about 11.5 pips towards the downside. Euro New Zealand dollar, however, was a bit more funky. We'd seen about 33.5 pips towards the downside on the first candle, and then after about 10 minutes, we were down by about 53.5 pips. Okay, and the euro Aussie dollar had seen about 30 pip moves, seen about 30 pip move towards the downside, and after about 10 minutes, 41 pips. So the sentiment at the time, of course, one of the things that was kind of that I picked up on was a lot of the Russia-Ukraine comments had come through about the threats to the Eurozone economy and how that could impact inflation, and also the instability that could cause. So that had also added to the sentiments for a depreciation in the euro. The fear that the Russia-Ukraine conflict is going to have a bigger effect on the Eurozone, and them not giving specific details of when to raise interest rates and on how much they're going to raise interest rates by, caused that sell-off in the euro. So this is how long it took for the euro dollar to actually reach its pre-release level. Okay, so at its peak, we had seen about 158 pips. Okay, that was a peak, and then after after about 2 hours and 15 minutes, only then did it actually reverse and go back to its pre-trading level. But then again, as said, so euro dollar was down about 158 pips. So it's really negative for the euro when the markets didn't get their hawkish comments of when the rate hike could happen specifically and by the amount as well. So again, was very negative for the euro off the back of that. So we've got about 5 minutes left. Even though I did kind of take a couple of minutes to start this, we've got through quite a bit so far. Actually, one thing I do want to check for you guys as well is to Casasa Lewis says, great presentation. Whoa, getting even better. Thank you so much. Let's have a look at the euro where it is at the moment. So we're slightly flat, up about 0.1. And if we're looking at euro GBP, okay, euro GBP also similarly more or less flat at 0.08%. Let's have actually the euro New Zealand dollar, which was the biggest mover the last time round. We had the rate decision, pip wise. That's also more or less flat as well, by about 0.17%. Euro, let's have a look. Euro UD. Okay, that's up about 0.3. All right. So about 4 minutes left then, till we get that rate decision. Okay. So of course, the forecast then, if we bring up the forecast for today, it's been the same as it has been before. So expecting no change from both the ECB interest rate itself, or the main refinancing rate, and also the deposit rate is to remain unchanged as well. So the rate figure itself, everyone's expected to remain unchanged, but it's going to be the meeting, or it's going to be the rate statement that we get that is going to be quite key to look out for, and how the markets react. And I'll kind of go through that at the same time as well with you, of what is the key comment as to why the euro moves in whichever way it moves today. But remember, we're looking for more hawkish comments from the ECB of a potential openness to a 50 base point hike in July, and what will be even better from the ECBs if we do get expectations of or more of a timeline of when rates can be raised as well. So that'll be great. All right, so about 2 minutes or less than 2 minutes to go. Paulo Santos says seeing some moves to the upside. Not a great sign when the euro pumps before the announcement, says viral stuff social media. It's an interesting username. Okay. Yeah. Right. Let me get tick strike open too. Let me get what the heck? Okay, so yeah, bit of a pump there already from the market before we've even got the rate decision. Dollar, let me bring that up. Okay, euro CAD. About 51 seconds. See how quick I can do this. Euro NZD. Okay, so you can see tick strike there. Kind of actually, if I put it, yeah, I'll keep it here for now. Okay. 27 seconds. Okay, it'd be really funny if they don't give the timeline of when they're going to hike rates or by how much. That would suck. All right, about 10 seconds left to go now. 10 seconds. So no change in both those bits of data there. All right, let's look at the headlines. Whoa, there's a lot coming through. Okay, high inflation is a major challenge for all of us. They'll make sure that inflation returns to its 2% target. May inflation again rose significantly, mainly because with prices for many goods and services increasing strongly. Euro seeing some movement towards the downside here, so just kind of getting through these comments as quick as I can. Wonder if they do mention anything about the rate decision. I don't see anything as of yet. Let's see. Inflation. They've revised their baseline inflation projections up significantly. Come on, let's see. These are coming through. Sorry guys, I'm trying to weed it through here. Okay, so nope. So just talking about any of their APP and PEPP, excuse me, ending asset purchases under APP as of July 1st, so end of June. Nothing about a rate decision here. Okay, all right, here we go. ECB, so in line with ECB's policy sequencing, they intend to raise rates by 25 basis points at its July monetary policy meeting. So not the what the markets were expecting them to say of looking for a 50 base point hike, as ING said, kind of sticking to their narrative, their current narrative of raising rates by 25 basis points rather than 50 basis points. So that's the key comment there. There you go. So all that nice little pump towards the upside on the euro, now being was just been wiped out off of that comment of saying 25 base points rather than a 50 base point hike in July. Let's see what else they say as well. So a lot of it is increasing the expectations for inflation. But as I said, the key thing was whether or not they were going to say or they were going to look for a 50 basis point hike. The markets reacted as expected. Right. What else? What else we got? What else? Okay, so they say that if medium-term inflation outlook persists or deteriorates, a larger increment will be appropriate at the September meeting. Okay. And calibration of this rate increase will depend on updated medium-term inflation outlook. So like I said, inflation is the key mandate at the moment as other central banks. And they expect to raise interest rates again in September. So ECB says beyond September, based on its current assessment, ECB anticipates that a gradual but sustained path of further increases in interest rates will be appropriate. So again, not being specific with their rate hike expectations of giving figures, but saying that they're, ouch, I just hit my hand on the table. But just saying that they will look to raise rates in September. That would be appropriate to do that, and they're more or less the same, really. Okay. That's basically it. Yeah. So there's a bit of a flop from the ECB and rate hike expectations of what the markets were perceiving. So just to make it clear, viral stuff, social media says, I'm out from the pump. Right. Yeah, there we go. That's the rate decision. So the unexpected looking for a 25 basis point hike rather than a 50 basis point hike is what the markets were looking for. So not as hawkish as what markets were expecting. We're keeping an eye on some of the other currencies too. So as I said, the Euro New Zealand dollar was the biggest mover currency pairwise in pips. We have a look at that compared to the other currencies too. Let's look at the euro dollar first. That'd be okay. Alrighty. So right, nice. So that's nice. That's about 54 or 54.5 pips. Yeah, about 54.6 pips there, or about 54.5 pips down. Euro New Zealand dollar. Let's see what you got. See what you're showing us. Okay, so bigger move compared to the euro dollar. About 67 pips there, or 66.9 if you're being really specific with it, from the start of the candle to the wick. Euro GB. So that was, as I said, Euro New Zealand dollar was the biggest mover last time. Could be the same situation here, but let's have a look at the other ones. Right. Okay, Euro GBP, so we're about 27 or about 28 pips down. It's like a euro AUD was the second largest move. Okay. Yeah, 67.5 pips down. Okay, and what else are we looking at? Okay. Where else was the biggest mover? So we've got the Euro New Zealand dollar as the biggest mover so far. Euro Aussie dollar as the second biggest mover. Euro GBP 27.5 or 28 pips down. Like Euro JPY. Oh wow, okay. Wow. So that was 77.7 pips down, or 77.5 pips down on the Euro JPY. So that was the biggest mover. Well, that is the current biggest mover now. Euro JPY. I think so. I think just going off of this stronger market reaction, pip movement wise, on the Euro JPY, if you're kind of confused as to why the Euro New Zealand dollar wasn't the strongest reaction, it's because of the central bank easing from the Bank of Japan that has caused the yen to fall. It fell to a 20-year low against the dollar about a couple of days ago. So overall, there's been a lot of yen weakness from what we've seen in the markets. Hence, why Euro JPY probably has seen the strongest pip movement towards the downside when comparing it to the euro. So that should kind of explain maybe then. That should explain why the Euro JPY has seen the strongest movement so far. What else we got? Euro Swiss franc is what we also need to look at. Okay. And that was 32.5 pips, or about 32.7 pips if you're being very precise. Actually, I want to be precise. Alright, about 32.5 pips towards the downside. Okay, so let's go in order then of what was the biggest mover. Oh no, I had the Euro JPY there. Don't know why I would open up another window here. So the biggest mover, number 1, Euro JPY. Number 2, Euro New Zealand dollar. Number 3, Euro Aussie dollar. And then number 4, Euro USD. Number 5, Euro GBP. And then Euro Swiss franc. And then finally, Euro GBP with about 27 or 28 pip move towards the downside. All right. Ooh, got a lot of comments here. What else we got? I think we got so whilst I was looking at the charts, we'd seen some money markets, and some money markets increased bets on ECB rate hikes, now priced in 140 basis points by the year end, including 75 basis points by September. Okay, so they're looking for, yeah, all right. So there's got to be 50 basis points somewhere then. Yeah, so probably 50 basis points in September, maybe then from here, and how the ECB has, and what the ECB said then. So 25 basis points in July and a 50 basis point hike expected in September, then is what the markets are looking at then. And depends how the markets see the rest of the year ahead, whether or not there'll be 25 basis point increments after that 50 basis point in September. whether there could be another 50 basis points. But that depends on what the ECB says at their July meeting. All right. So Paulo Santos says sentiment uncertain. Well, not really. Not from the initial market reaction. The sentiment was they were looking for a 50 basis point hike for July as one of the comments, but that didn't come through. We'd seen a 25 basis point hike is what is going to be done for July. It was a clear drop off in the euro is what we had seen from there. So the sentiment was quite clear on that market reaction that we had seen. Although yes, it has more or less now reversed that initial drop. But you see the strength of the move in the markets to show you that sentiment was clear in what they were expecting. What else we got? Almost little to muted reaction. Depends what time frame you're looking at. Galaxy One says, "How y'all doing? How y'all doing? I haven't seen you in a while. Good to see you again." Paulo Santos says, "Less hawkish. Dollar would see upside for the euro. Let's see tomorrow. So 50 basis point safe for July." Galaxy One says Euro Swiss franc. Yeah, we had looked earlier. So Paulo Santos saying probably is coming out as I was going through the comments then from the ECB. Viral stuff. Social media says overreact in the market. Nothing surprising. Again, yeah, kind of big to differ with that. With what was expected and what we didn't, or the lack of the information that or lack of the potential 50 basis point hike in July. 60 pip retracement on euro dollar. How far back can I scroll on financial juice? As far as you want. Probably, I think the very first headline that we had was 2015 was when I did some research. So I think I was looking at US inflation data for the webinar of trading economic events, how that affects the S&P 500. Yeah, probably back to late 2015, early 2016 is how far back. You can look at the headlines on Financial Juice on the news feed. Statement not hawkish, but market is doing the job. Yeah, so yeah, clear thing. So it wasn't as hawkish as expected. So again, sentiment was there. It was clear. They wanted a hawkish statement. They didn't. Or hawkish enough. And that didn't happen. All right, so that is does anyone have any questions? Did anyone try and trade that rate decision? Or what is everyone doing at the moment now? Or is that kind of where you're gonna kind of leave it? If not, then you know, good luck to you. Hopefully the trade does go well for you, or is going well for you if you did trade off of that release there. Hopefully what I said and what I showed you helped you in your expectations of what to expect from the markets too. Paulo Santos says position to the downside. Okay. But yeah, like I said, hopefully what I've said has helped you enough to be able to kind of weather the storm then, let's put it that way, from the ECB being boring. It's put in a simple way. A boring ECB, not really as much of a surprise or meeting expectations as we'd wanted them to. So now, this brings me onto my key point. So you've seen the headlines that have come through. You've seen the market reactions, and you've seen that the data basically came out on the dot, okay, with the rate decision. So Financial Juice Pro, and this is quite key for any trader out there wanting to manage their risk, improve their trading, or capitalize on potential trades that can occur when headlines do come through, when there are certain geopolitical events, of course, with the Russia-Ukraine conflict. That has been very evident, that there's been a lot of volatility that has come from that geopolitical scenario that we're currently in at the moment. And traders love volatility. The more volatility there is, the better. Well, it depends. If volatility is strong, it could wipe you out really quickly. But again, volatility is fun. So how do we kind of capitalize on that? And how do we kind of recognize when there's an increase in volatility? And why is there an increase in volatility? Well, it's what investment banks do. So they will have a live voice and text service or a squawk service they will keep an ear on or look at the headlines for, to be able to, first of all, manage their risk in the market. If there is an increase in volatility, what's causing that, okay, in the markets, via the maybe geopolitical events, or maybe a central banker is saying something, or you maybe have JP Morgan CEO saying that maybe the recession isn't going to be that bad, or there's less likelihood of a big old recession. Those sort of comments that come through that the average everyday trader doesn't have access to. Okay, this is some high level stuff of providing a voice and text feed. As I said, investment banks use this, right? So there's obviously a value that investment banks see as to using a live voice and text service. But one thing that so this is what we're trying to do for you guys is this Financial Juice Pro. Okay, so if you're on the light version of Financial Juice Pro, of course you know that it is delayed. You have adverts playing, and of course you have advert banners that appear in the feed as well. So what Financial Juice Pro does, okay, and of course light is also delayed as well for the economic releases. So what Financial Juice Pro does is you don't have any adverts playing. You have live real-time news coming through, voice and text to the second. And also for economic releases, lickety split quick when they come out to the site as well. So you have that as an advantage too. And the brilliant thing about it is it's all in one place, right? You're not having to look at a separate calendar or just rely on the voice solely when you're listening for an economic release. You have it all in one place together on Financial Juice, all on here. So as you can see, with the voice there, the news feed here with the headlines, of course, being put out from the ECB rate statement, and the economic calendar here on the left-hand side. That's all in real time. There is no delay to that. And also for economic triggers as well. When you're trading a release, let's just say for the ECB interest rate decision, or let's say for initial jobless claims, okay, you can put in your own buy and sell alerts. So ignore this little figure here where it says 206. That's just a forecast. That's grayed out. That's not us telling you where to put the figure in, but you can set that manually yourself wherever you want it to be. And you can kind of change whether or not, if the actual is greater than 350, you put a sell alert, or vice versa. And then you can, once you've saved that and you've popped that on here, when the data comes out, literally to the second or at the same time, you get that little mini alert if the trigger is matched, right? Or if the figure that you're looking for is matched, then it will appear with a buy or sell alert right there in real time. So what we're trying to do is to make your, to help make your trading experience easier, to try and help you with, of course, providing you with the live voice and text feed, providing you with these other little things that you can use yourself to make your experience better. But as said, investment banks see a strong value in this. So if you're unsure as to why to use a live voice or text service or a squawk service, then this is one of the big reasons as to why you should use that. So what we're going to do, of course, it wouldn't be fair if we just tell you to buy it without giving you some sort of a way to play with Financial Juice Pro. So, bing, there it is. So there it is. So Financial Juice Pro, we've popped in the link there for a 7-day free trial to have a play around with it. Of course, if you're not used to using or listening to or using reading from a squawk service, then 7 days are there for you to have a play with that and kind of see how you can use that in your own trading as well. So as I said, the link is there for you in the chat for you. Now, the other thing you've probably also have seen as well is tick strike. Okay, tick strike was going off, and now it's kind of quiet as the market momentum. There isn't too much going on, but tick strike, what it does is it allows you to listen to order flow and also see a visual representation of that. Okay, so in simple terms, it's showing momentum. Okay, the momentum in certain asset or asset classes. that you can look at, like what I've done here with the euro. I've got my euro GBP, euro CAD, euro USD, euro New Zealand dollar. Over, I'm looking for how much momentum that there is in the euro currency, and that's kind of showing me here what I'm looking at. So if we can see that there's a bit of buy momentum, maybe overall that the euro is, as we can kind of see, the euro is seeing some movement towards the upside. Now, the brilliant and beautiful thing about this is that you can change the level of sensitivity, okay, of how much momentum you're actually looking for before you see a visual notification or listen to the audio. Of course, at the moment I've got it turned off, so it'll constantly go off if I've got it on 1. But you can change the level of sensitivity. So level 1 is where is the most sensitive. So these little movements where we can see here where there's a little bit of selling going on, a little bit of buying going on. If it meets the requirements, then the trigger will be set for, as you can see here, for tick strike to go off. But if I want to see stronger amount of momentum or stronger moves in the market, then I can increase that sensitivity all the way, decrease that sensitivity all the way to level 15, where it's the least sensitive. So what I'm looking for is a strong amount of momentum before tick strike goes off with a little visual audio alert that I have here. So probably around when we had that, when we had the rate decision coming out, you would have seen, of course, we from my peripheral vision, seen a lot of tick strike going off quite a bit, and probably going into around the 10s and upwards to around the 15 level. I'll watch the video back to see how far I went. But if you're looking as ways to kind of use tick strikes, so some traders, so scalp traders, can kind of capitalize on the big movements in markets, or if you're looking to kind of manage your risk, maybe you do have a certain trade that's going on, but maybe you've got maybe you're selling at the moment, or maybe on the euro dollar, and then you see there's big old huge momentum of buying coming through, and it's still quite strong and persistent. Again, it's a way to manage your trade as well, manage your risk. That's the couple of ways that I've seen traders and have heard traders using tick strike, particularly with a lot of the partners that we've reached out to in the past, and when we've talked to them about the product and their reviews of it too, and how their users have used it as well. But that is tick strike there for you. Again, there are a multitude, and there's a plethora of different assets that are covered. So of course you've got your forex, you've got your stocks, you've got your stock indexes, your commodities, your ETFs, your ETNs, your cryptos as well. There are a load of different assets, specific securities that we cover, or tick strike covers, that you can utilize to the to however you want to use it. Again, I'm not saying that there is a specific way, but what we want to do as well is to provide you a 7-day free trial of tick strike. Have a little play with it, see what kind of method or trading method works for you, how it fits into your trading method when you're trading economic releases, or maybe headlines, or just generally looking at technicals or less so fundamentals. If you're not using Financial Juice Pro as a way to kind of gauge what's going on the markets and how headlines are affecting sentiment overall. But have a 7-day free trial of that there. Have a little play with it, see what works for you. And finally, of course, if you've liked this video and the detail that I've gone into and the information that I provide you, and if it helped you in your trading, then don't forget to like this video, share it, subscribe to the channel, okay? And also give us a follow on Twitter as well, on here, right? So that is there, the link. I realized a couple of weeks back that I provided a different link to the Macro Ace Twitter feed or Twitter account, and it went to some random guy. But now that's sorted, so you should be able to click on that and it'll go straight to us there. Now, the other interesting thing is, I know I do see some comments coming through on the chat, so don't worry, we will get to them. So the other thing about Macro Ace 2, of course, not only are we providing you of a level of in-depth detail, okay, about what to expect for the release, what the release is, and how the markets have reacted before and what they're kind of looking for. But we also have our mailing list and our weekly email that I put out every Sunday, which provides you with the week ahead of what to expect with economic releases, to the weekend news that we had seen, like as a mini wrap of the weekend news. Also putting out the deviations as well of the releases and how different currency pairs or different assets have reacted in the markets. So this thing here. So not only am I covering, of course, the ECB rate decision, but I'm covering a load of other different releases. The releases that will have the biggest movement. So you've got your GDP, the rate decision, rate decisions, employment data, ISM manufacturing, EI inventories, inflation reading, which we'll have tomorrow, alongside with the Canadian employment change. There's a load of releases that I cover, and you can see that the detail that I'll go into as to how that asset had moved, and how many ticks or pips that asset moved by, and then talk about some of the sentiment too as well. But yeah, so that will also be included in the weekly email now, and also the videos of the past live streams. What I used to do beforehand was I would put out an email every day of the video, but I think that's quite spammy. So what I've done instead is I've created a playlist of the releases for that week, and that will be put in as a link for you guys on the Sunday, so you don't have to click on so many different links instead. And of course for the videos for the week ahead in another playlist too. So that's macro ace, and of course, you guys, it depends on what you guys want. So if there's more detail that you guys want, or different things that you want to kind of cover with macro ace, then don't forget to email me at tony@financialjuice.com, and provide me with any feedback, and give me ideas. This service that I'm providing here for you, that we're providing for you, runs off on you guys and what you're expecting. So I've built this up from where it was from its very humble beginnings, still at our humble beginnings, but I've built this up from your comments and your feedback that you guys have given to me to make it an even better service and provide better detail, and make it very useful to you guys. I hope it was useful today. I know I had some comments that said that it was a great presentation, but I hope the information was great for you if you were trading the ECB rate decision. All right. So yeah, those are all the links. Actually, no, I didn't. One thing I didn't do is I didn't put in the link for the place where you can sign up for the mailing list. Okay. So remember, Sunday is when I'll be posting when I'll be sending out the week ahead and the previous videos that we've seen for the releases. All right. So I've got a lot of comments coming through. Where am I? Where am I, guys? Okay. So just comments about, Galaxy One trading 50% of a position, trading Euro Swiss franc since 1023 up to 1.05. Okay, nice. Now 1.06. Is a Squawk voice fast? Yes, it is. It is a legacy split. See, I think that the benefit of Financial Juice is that the team that we have, okay, is that we make sure that we have an understanding of what's going on. Okay, not just of the headlines that we receive and that we just put out on the site, but having that extra understanding of what to expect, maybe of unexpected news and what to expect from the headlines. Because of that increased amount of knowledge, we've become very, very quick in the way in how we deliver and how quick we are when we are delivering the headlines to you guys. So yes, as I said, we are very, very quick. But of course, you have the 7-day free trial there. Have a little play, see what you think. And always, and of course, if you do have feedback, that's always welcome as well for Financial Juice too. Tell us how we can improve that as well. And one of the other things is we also have a new product out as well called Unusual Activity, the app, which shows the stocks that are having the most unusual movement, or a movement that doesn't make sense, and that's highlighted in Unusual Activity. Of course, I don't have it up at the moment now. I will a little bit later on, but that's another thing that you can, as one of our new products that we're currently trialing at the moment, and we will love your feedback if you received your email from Amar, to have a little play with that as well, and then we can of course improve that product.
Hey guys, this is Amar. I think someone just asked a question about unusual activity. If you go to unusualactivity.live, you will be able to download the software and use it completely free. We've got it available for the next few weeks as we beta test it. We're trying to get as many people as possible using it. Currently, it's set up for stocks. So US stocks, you'll get alerts of unusual activity. But over the next couple of weeks or so, we'll be adding FX, futures, and hopefully some crypto. So whenever there is an unusual spike in activity in any of these instruments, you'll be able to get an alert for that. So if you go to unusualactivity.live, not .com, .live, you'll be able to download the software, set up your own username and password when you download it, and hopefully have a play around with it.